Qantas profits have taken off amid rumours it could be the target of a takeover. The airline has doubled its full-year profit just 1 week after unveiling plans to axe 1,000 jobs. Unions say the profit result flies in the face of the airline's claims it's too broke to offer job security.
Qantas profits have soared, doubling over the past 12 months to $250 million.
We really do punch above our weight. We've made a profit every year since privatisation.
It was enough to see the Flying Kangaroos shares rebound, but they finished down for the day. Despite the robust result, the airline warned it was not about to scrap its plans to axe 1,000 jobs. The results confirming its international business lost more than $200 million. But while today's profit results came as no surprise, rumours of a takeover bid did.
Because as far as I know, this is pure speculation.
We are determined to ensure that Qantas stays as a majority-owned Australian airline.
The airline also fended off accusations in Parliament that Jetstar's expenses are being shifted to Qantas to justify moving jobs offshore.
The reality is that Qantas has long been used to subsidise Jetstar in order to make Jetstar look profitable and Qantas look like a burden.
I think this is in line with the moon landing conspiracy theory, that we didn't land on the moon. It's in line with Elvis is alive and well and serving a McDonald's somewhere in Manly.
But unions fighting job losses say Qantas is the one with a credibility issue.
123% profit. They said they can't afford it.
Qantas is now facing disruptions from tomorrow. Its engineers will begin a campaign of 1-hour rolling stoppages. Still, Alan Joyce is showing no sign of backing down.
And if that means tension with union leaders, if that means tensions with some of their members, then so be it.
Tension that could continue for quite a while. Kylie Simmons, ABC
Qantas
News.
is forecasting a large drop in first-half profits, blaming the impact of strike action and the temporary grounding of its fleet at the end of October. Underlying pre-tax profit is expected to come in between $140 million and $190 million. That's down from $417 million a year earlier. Qantas is calling media reports that it is shelving plans for an Asia premium subsidiary as pure speculation, confirming it is still talking to Singapore and Malaysia about such a carrier. But Qantas admits it has yet to make a final decision on the strategy. Qantas says it's simply too volatile at the moment to provide specific guidance for the second half. Traffic volumes, meantime, across the entire airline for October fell by 1.8%, including an 11% fall at Qantas Domestic and a 3.6% fall at Qantas International. Domestic volumes at Jetstar, though, jumped by 7.9%, and shares in Qantas doing well today, up 3% at the moment at $1.50.
For months, Qantas management has been highlighting the problems of Qantas International and talking up the success of Jetstar. The cut-price airline looks more nimble and far more profitable than the older premium airline and is being presented as the model of the future. But the pilots' union says it's found evidence questioning this picture, suggesting Qantas International is subsidising Jetstar and making it look more profitable than it actually is. Qantas vigorously denies the claims, as Connor Duffy reports.
It's been a turbulent year at the national carrier, with fighting words from unions and management edging the company closer to industrial war.
It's difficult to see your career path evaporating day by day, and to avoid not getting very disheartened about all of that.
We want Qantas to be around for the next 90 years. We want Qantas to survive. We have to change in order to do that.
The company's management says change is needed urgently, and its hopes lie with the Jetstar model. Bolstering the case is that Qantas International is losing money while Jetstar is raking it in. But that conclusion is being challenged. The pilots' union asked a Melbourne-based firm of forensic accountants to look at the books. 730 has seen its conclusions.
Qantas contributes 77% of revenue, almost equivalent to its fleet size of 191 planes, or 75% of the fleet. Jetstar contributed 16% of revenue, with 59 planes, or 23% of the fleet.
So Qantas brings in most of the money, yet its contribution to profit is paltry.
Qantas contributes just 14% of earnings before interest and tax, and Jetstar contributes 28% of earnings before interest and tax.
For months now, Qantas employees have argued Jetstar only looks so good because it's being subsidised.
I think you'll find that the Qantas cash cow is supporting the operations of the group. Certainly central treasury, legal, IT, etc. But there's a fair amount of evidence that Qantas is cross-subsidising Jetstar operation.
Qantas management vigorously denies that.
The Qantas Group has a user pay system where the part of the business which uses the goods and services pays the cost.
Qantas insists Jetstar pays its own way.
Qantas Airlines does not cover labour costs for Jetstar. Qantas Airlines has a robust service level agreements in place with the specific intent of Jetstar bearing the cost for services rendered.
The company declined to speak on camera, but a spokesman said it had rebutted the pilot's report in a meeting with union representatives and the chief financial officer last week. It says any suggestions of cross-subsidisation are unsubstantiated and baseless.
The presentation was a PowerPoint, we weren't allowed to take it away, and so it just raised more questions than it answered. And they did say that apparently that they weren't cross-subsidising, but the evidence given to us and from other sources is they are or were cross-subsidising, maybe they're not now.
The forensic examination paid for by the pilots also raises questions about whether Jetstar is getting planes from Qantas on the cheap. Of Jetstar's 51 aircraft registered with the Civil Aircraft Register, 6 are owned by Qantas and leased to Jetstar. The forensic examination asks if they are leased at mates rates.
The fact that the inter-segment operating lease rentals are the same as the depreciation charge suggests that the internal charge for the aircraft used within the group is only based on the depreciation charge.
But Qantas flatly denies there is any sweetheart deal.
In line with the user pays philosophy, both Qantas Airlines and Jetstar pay for the aircraft they operate. If the aircraft is leased, the airline that operates it pays the lease charge. If the aircraft is owned, the airline that operates it pays the depreciation charge.
The mood of the staff at Qantas is gloomy. There is widespread suspicion that Jetstar is being propped up. An insider with knowledge of recent management decisions has given 730 a dozen instances of alleged support. For example, it says,
Bali staff are paid by Qantas despite the airline not operating a service to the island. And all of the JQ executive salaries are paid by QF.
In a statement, Qantas acknowledged the salaries are paid by Qantas, but said they were fully recovered from Jetstar. It also said its books are audited by KPMG. This is more than an argument about accountants. Qantas has regained its future within the ruthlessly competitive world of Asian airlines, and it's using this comparison of the two cost structures to justify its dramatic move. But not everyone is convinced that the story it's been telling is all it appears.
Connor Duffy there, and look out for Qantas to release its full year results tomorrow morning. For most of its history, Qantas has been unassailable, one of those iconic and much loved Australian companies. But it's going through a tough time, with bitter industrial disputes last year causing management to briefly ground the airline. In the 4 years that Alan Joyce has been the CEO, the Qantas share price has halved. Today, the bad news continued, with the national carrier posting its first annual loss since it was fully privatised in the mid-90s. Qantas management is confident its strategy to get Qantas back in the black is on track, and shortly Alan Joyce will join me. But first, this report from Greg Hoy.
Even announcing a 90% fall in net profit today and the first statutory loss for Qantas in 17 years, Alan Joyce was endeavouring to look on the bright side.
We are financially strong, profitable at an underlying level,
He blamed the large losses on the soaring dollar, fuel prices and the drag on profits of Qantas International. But Alan Joyce claims the airline is slowly turning the corner.
The benefits of our transformation programme have started to come true.
So is the Qantas chief's air defence a fair defence?
We've got the first loss in 17 years for a management who's completely lost their way.
The reality is it is a statutory loss. That is the true result of the company, and we believe the management and board should be clearly accountable for the company's performance and its result.
And it's not just shareholders, it seems, concerned how Qantas portrays its profit and loss. Former senior Qantas executives have also voiced their concern to 7:30 about the credibility and transparency of Qantas accounts, endorsing the protests of others.
Why has it taken so long for everybody to realise that the international business of Qantas could well lose $500 million this year? It was 2 or 3 years ago they were saying it was losing $120 million. And really, no one really knows where the costs were being allocated.
We know that there are quite a few organisations and quite a few accountants going through the Qantas results, and it does appear that the disclosure is very difficult to understand.
There is also strong concern, including amongst former executives, that the airline tries to shift as many costs as it can away from its low-cost carrier Jetstar and onto the books of Qantas. The aim, the critics claim, is to bolster Qantas's campaign to slash labour costs and to boost that side of the business with the least government regulation.
They'll do pretty much whatever it is they have to keep Jetstar looking as profitable as it possibly can.
Aviation unions also claim Qantas cooks the books to enhance Jetstar and justify cutting staff or their conditions at Qantas. Qantas pilot Captain Brad Hodson.
The law does require them to really be transparent, and really I think we'd say at this particular point in time that's not the case.
They've put all these costs on their Jetstar expansion, operations that aren't successful overseas, onto their international Qantas arm, and they're trying to say that it's everybody's fault other than the executives who have paid themselves an 82% increase in executive pay in the last 3 years.
Dr Tony Webber was chief economist at the Qantas Group from 2004 until last year.
What I do think has happened is that Jetstar enjoys a number of services that they don't actually pay for, such as the legal department, corporate communications, investor relations, all of those overheads, back office overheads.
Dr Webber believes this is for accounting convenience rather than deliberate deception. Qantas now says it will split its domestic and international arms into separate management teams but under one corporate umbrella, leaving many suspicious about the transparency of Qantas accounts.
Until Qantas is split into two separate companies with two air operator certificates, just like Virgin is today, the Australian investment public will never know how the business is travelling.
With industrial tension still simmering, Alan Joyce has just offered to forego his bonuses that last year lifted his remuneration by around $2 million to almost $5 million, salting the wounds of Q catering staff in Adelaide, who say they've been in limbo for 6 months, waiting to hear when their jobs will be axed.
Many of them have been there for decades, finding their wages, their job security being slashed and burned. And to find Alan Joyce saying that he may forego a bonus, now he should be handing that $2 million back, and he should be taking a 62% decrease in income in line with what the shareholder value drop has been in the last 3 years.
Who would want to be the head of Qantas? Well, actually, while Qantas remains on the defensive, its key competitor, Virgin Australia, is on the attack. Qantas defector John Borghetti, who was overlooked for the chief executive's job that went to Alan Joyce, has now turned on his former employer with a vengeance as Virgin's chief, dragging the budget carrier up market.
He seems like he's doing a number on his good mate Alan Joyce at the moment. He's taking some market share away from him. He's expanding very, very quickly.
Qantas has pursued what we short-term risky ventures into Asia, Red Q, Jetstar Pacific. Pretty much most of those things, they spend a lot of money, but there's no return on capital there.
Aviation unions recently surveyed staff at Virgin and Qantas to ask if the right management was running the airline.
85% of employees do not have confidence in the direction that Qantas is taking. And when you compare that with their major competitor in the domestic market, Virgin, there's only 1.5% of employees at Virgin do not have confidence in their management.
But it's not just unions beginning to ask if Qantas should remain in the hands of current management.
Management have failed to articulate a clear path into the future.
Unfortunately, it appears the current management doesn't seem to have an answer for what's going on.
Private equity guys out there are looking at the numbers very, very closely. There might be an opportunity to buy and carve up Qantas, as they attempted to do a few years back.
And earlier today, I spoke to the Qantas Chief Executive, Alan Joyce. Alan Joyce, welcome again to the program.
Thanks, Lee. It's good to be here with you.
The question I'm sure passengers would like me to ask you is, what does a substantial loss like this mean for them? Will it make any difference to people who fly Qantas?
No, it won't. I mean, we're still investing very much for the future in Qantas. We're spending $1.9 billion for new aircraft this year and next year. We've gotten the fleet down to the lowest age it's been in some time, 8.3 years of age. We're investing in new lounges, new entertainment system. So that investment is a very important part of the turnaround that we're planning for the international and the domestic business.
A lot of people will remember the industrial action last year and the decision to shut down flights briefly. What's your internal research telling you about the impact that that's had on customer attitudes and customer loyalty?
Yeah, customer loyalty for the premium Qantas brand is as strong as it's ever been. We're seeing that customer advocacy, which is people's impressions of Qantas when they fly, people's impressions of our product and our service, is at the highest levels it's ever been. So we're very confident that we're in a very good position in terms of customer loyalty, in terms of customer focus, and in terms of where the brand is positioned.
If that's the case, then why is it that in the Skytrax World Airline Awards, which surveyed millions of passengers worldwide, Qantas dropped from 8th to 15th on the list of the world's best airlines? And why is it also that tens of thousands of your frequent flyers took up a deal with Virgin to transfer their status across there?
Well, I think one of the things that's there's plenty of surveys out there around the world in terms of different research and rate the airlines, and we've won with the travel agency community Best Airline of the Year again for I think the 4th or 5th year in a row. We've won other awards for being the best airline. Even in Skytrax we won the best airport lounges. So there's plenty of different information out there.
So you don't accept there has been any brand damage done by what's gone on over the past year?
Absolutely. We believe that our brand is healthier, and our own
no damage at all.
Our own internal customer advocacy shows that it's actually at the strength, its best strength it's been, the best ratings that we've ever seen. And of course, you know, for us it's very important that we measure a whole series of dimensions about the Qantas brand. We measure the dimensions about our safety reputation, we measure dimensions about being an iconic brand, and they're back to the healthy levels they were before the action.
For quite a while we've been hearing from Qantas that your domestic business is really strong but your international business is struggling. Why then does Qantas not say, all right, there's other airlines around the world that have advantages we don't have that allow them to be profitable internationally? We simply aren't, and so we're not going to put eggs into that basket.
Well, the international business is a business that has been impacted by two things in particular. First of all is high fuel prices, which is impacting nearly every long-haul carrier around the world. We've seen big losses by a lot of big carriers now being reported in the last 6 months, and a lot of those carriers are going through their own restructuring program. We have the added problem of the high Australian dollar, because before the global financial crisis an average that's $70 to the US dollar, now it's 105. And most of our competitors are competing in US dollars, so that's a 50% increase in our cost base. So for us, we do have those challenges.
But isn't the problem that these challenges you're facing, the high dollar, the global downturn, the high fuel prices, nobody expects those things to resolve in the short term. In fact, they could be things that are here to stay for quite a while. We've also got the issue that Australia is just geographically at the end of the line. Those are things that really Qantas is never going to be able to overcome. They're here to stay, and there are other airlines that can cope much better with those factors?
Well, we've said that we have a comprehensive plan to make sure that Qantas does adapt to the current market situations, the high fuel price and the high Australian dollar, and we have to adapt to that.
But I'm just wondering why. Like, why do you want to stay and expand in that area of the market when you do have these really difficult challenges, yet you've got this domestic market that works really well for you?
Well, we do believe that the international business is a key part of what we do.
And
the
why?
International business, it does link to domestic, it does link to frequent flyer. Those business do need a strong international operation. And we do believe that there's no silver bullet to fix international. It means a lot of hard work. We've outlined our 4-pillar strategy last year. We're busily implementing that strategy. We've announced a huge amount of transformation, closing down heavy maintenance base, catering centres to make that business efficient, doing new deals with new partners around the world, like American Airlines to Dallas, which is going very well, LAN to South America. We are working very heavily on the customer product, the new aircraft, the fuel-efficient aircraft, and we are working on expanding our operation into key markets.
The Transport Workers Union says that there are 19 separate industrial agreements up for renegotiation that have the potential to disrupt Qantas operations. Do passengers need to be worried about further inconvenience?
Well, we have a huge amount of agreements that are coming up all the time, and we work through the vast majority of those and continue to work through them. I think there's 54 agreements with 14 different unions, and nearly every other month is one agreement that we do. And I think
So that sounds like a lot of potential for disruption.
No, it isn't. But a lot of businesses are like this, and a lot of businesses have to work through them. I think it's sad that some of the union leaders are out there trying to continually damage the Qantas brand, trying to continuously damage the business, and trying to continually damage their members' jobs in the organisation. I think that's sad.
But why would they be motivated by that?
But I think there's people out there that obviously have their own agendas and are pursuing their own agendas. My focus is on turning this great business, Qantas International business, around to have the same success with that business that we had with domestic, with Jetstar and frequent flyer. And we won't be distracted by the noises that some of people out there, the armchair drivers, will make. Our focus is on delivering on what's sensible for our employees, our customers and our shareholders.
Alan Joyce, thank you very much.
Thanks, Lee.
Tonight, is the flying kangaroo bouncing back? Qantas half-year profit takes off, and the boss claims his restructure is paying off.
By engaging our people, we are creating a better, stronger Qantas.
Qantas has climbed out of the red thanks to the Boeing Dreamliner not getting off the ground, taking a hit in the domestic dogfight in the battle for corporate customers.
The Qantas chief says his airline is on the way up.
We have just started realising the benefits of the changes we have made.
After bitter industrial disputes, cost-cutting and the dumping of unprofitable routes, losses in the international business are narrowing. It helped Qantas more than double its half-year profit, but so did more than $150 million in one-off payments, including a compensation payout from Boeing for cancelled orders for its new 787 Dreamliner. Now Alan Joyce is looking to his new alliance with Middle East carrier Emirates starting next month.
To give you a sense of the appeal of the Qantas-Emirates partnership, in our second week of selling, we sold more than 5 times the bookings achieved with previous partner British Airways in the equivalent week last year.
But Qantas's core domestic business, bruised by its battle with Virgin and Tiger, saw profits fall. Alan Joyce maintained Qantas was holding on to market share, including its dominant 84% slice of the growing business market.
John Borghetti and Virgin Australia have really forced Qantas to reduce its prices to hang on to them.
The positive is that the corporate market is still growing, still reasonably strong despite what's happening in China. So as long as that is a continuing growth, premium market is reasonably strong. That's definitely on the plus side of the ledger. The negative side is there is still too much capacity in the market for the natural demand.
Jetstar was also a victim of rising capacity as earnings fell, but it had to carry the costs of its aggressive Asian expansion and a generally tougher market at home.
That growth in Virgin capacity is also having an impact on Jetstar as well. The other impact that we're seeing is that the very strong dollar is increasing outbound leisure travel to places like Phuket and Bali and Fiji at the expense of domestic travel.
And it won't get any easier.
We can expect ongoing and vigorous challenges from our domestic and international competitors. And the external environment remains complex and volatile, with uncertainty in fuel prices and exchange rates. For these reasons, we have not provided profit guidance for the second half today.
Virgin has received a lot of capital support from both Singapore Airlines and Etihad Airlines, so it has deeper pockets now to sustain a weaker domestic business.
Which suggests that the capacity war will continue in Australia, with travellers the big winners. The share price of Qantas has headed skywards as it announced a turnaround from loss to profit today. In announcing its full-year results, CEO Alan Joyce described the market as volatile, but he remained committed to cost control and repairing the airline's international business. Phil Carey reports.
Summing up the airline business today is, according to Qantas boss Alan Joyce, pretty simple.
There are a whole series of positives and a whole series of negatives, and this typically, I think, happens in an airline of our size.
But according to Joyce, the positives are starting to bear fruit, turning a $245 million loss last year to $5 million profit, or as the airline prefers, a pre-tax profit of $192 million.
Look, there's no doubt that there's an improvement from last year, but it's still a very poor result. The improvement is from a very low base of a profit of around 97 million, so certainly there's an improvement, but the superior metric to use to identify whether the performance is good or not is that profit relative to their asset base, and that continues to be poor.
Nonetheless, investors lapped up Qantas shares today, with the share price up 14%.
This result shows good progress in the group's strategy against a challenging backdrop, with high fuel costs and intense competition.
But cracking open the numbers on what's been described as a strong position by Joyce reveals a few weaknesses. Qantas domestic earnings down $98 million or 21% on last year. Jetstar down $65 million or 32% down on last year. Qantas Freight down 20%. On the positive side, the non-flying Qantas loyalty program saw earnings grow by 13%. Qantas International, while still running a $246 million loss, managed to halve the loss from last year, and Joyce claims it'll get even better soon.
We are 2 years into our 5-year turnaround plan for Qantas International, and we are on track towards our target of returning to profit in financial year 15.
But the airline's former chief economist has a completely opposite view, describing the international business as being in terminal decline.
The reason I think it's in terminal decline is because that segment of the market is in what I call persistent excess supply, so there's always too many seats in the market.
And then there's the soaring cost of fuel, made worse by the lower Aussie dollar.
At current market rates, we expect underlying fuel costs to be $160 million in the first half of this year, higher than in the same period in the prior year.
That, combined with a relatively flat market, may well make the ongoing cost-cutting program that has played a big part in its profit even more crucial in the future.
That number is a very significant number of 19% cost reductions in the last 4 years. There wouldn't be many businesses that have achieved that.
And yet, since its heyday and profits north of $1 billion, the market hasn't shown much confidence in recent years in Qantas.
It's very, very volatile, and shareholders haven't been paid a dividend for 5 years, so if I was a shareholder, I wouldn't be happy.
So today's vote of confidence could be short-lived.